The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock, and we help hundreds of advisors and accountants, attorneys, insurance professionals with insurance needs. We're an insurance wholesaler, and we help you with all of your basic life insurance, disability, long-term care, and annuities. We are experts. We're licensed around the country. We also handle life settlements, which we've been doing quite a few of them lately. If you want to know more about that, hopefully in my show I'll get a chance to talk about that. It's a very, very hot topic, and I'll explain why. And Happy New Year, everybody. This is my first show of the year. I'm very excited about the new year. I did turn 65 when the new year turned, so I guess that makes me a senior citizen. I don't know. Being the youngest of 5 boys, being a senior citizen, I didn't think I ever thought about that, but, I was thinking about that, and, here I am. I had COVID last month, and with all the stuff flying around with the flu and COVID and RSV, I know a lot of people have been getting sick and everything else, and it caused me to reflect because we've had a lot of clients in the last few years that have passed away, that have had long COVID, that have went into some other areas. And when you're looking to buy insurance, or you're thinking about buying life insurance or long-term care, and they assess your health, I can tell you for certain, if you're on the fence and then you get some sort of respiratory thing and it doesn't go away right away, the insurance companies won't possibly give you an offer. And potentially, if you're older, you may never get an offer. So I encourage you, if you're on the fence and you're thinking about insurance, and you should be, it's very important, that move forward. Don't wait. Don't hesitate. Life can change in an instant. And we have a gentleman now. He's 77. He wanted long-term care and life insurance, and he's got a little bit of a heart condition, but we got him approved. But if he gets COVID before he moves forward, or has some sort of respiratory ailment, that could just knock him out forever to where he can't get coverage. We had a gentleman last year that maybe it's a year and a half now, sold him a major insurance policy, $60 million, largest policy we've ever sold, 43 years old. I know he got COVID, and he thanked us this year because a month after he purchased insurance, he had a massive heart attack, 43 years old. He's so glad he has the insurance coverage, and because he planned. Now, when you're younger, 20s, 30s, 40s is younger. Now that I'm a senior citizen, I can say that, oh, young man, my nephew's turning 48, and I'm like, oh, shoot, well, how did he get so old? But I'm like, and you're setting up your financial plans. The very structure, like if you build a house, the very structure, one of the key elements is to have life insurance. And you want to get it when you're young and healthy and when you can. And don't tell me you can't afford it. Because I can't tell you how many 40-year-olds and 50-year-olds I know that have passed even. And they, they'd spend $10 a day on lottery tickets. That's $300 a month for a lottery ticket that they'll never win. If they put that same amount of money towards life insurance, their family would have $1 million to take care of their family or more for the rest of their lives. So don't tell me you can't find the money, okay? Or you're going to Starbucks and spending $5, $6, $7 for coffee every day when you could stop at 7-Eleven or McDonald's and spend $1 or $2. And that $5 a day could take care of your family, your children, your wife, your husband. So the money is there. Doesn't cost a lot, especially when you're younger. It's pennies on the dollar. Like I said, life can change in an instant, and it does. My associate's son was in Mexico over New Year's, 33 years old, on vacation with his girlfriend, and died in his sleep. That happened last week. How awful. Life is so fragile. I mean, his whole life is in front of him. And now it's not. And I tomorrow I have to go to a service, and I'm just very upset. And a 64-year-old tax attorney that I know in Nassau County very well, it was in all the papers, she passed away. And this woman was at every networking event, very active, very, very nice person. These are people I know. These are people that, not them, not me. So when I hit COVID in mid-December, and I started having a respiratory thing, it gave me pause. I need more insurance right now. I hope I get over my respiratory thing so I can get it. But how does an insurance company? Well, here's the thing. If you have any kind of heart condition, maybe high blood pressure, maybe you had a heart attack a few years ago, and now you get COVID and you put that on top of it, and that respiratory thing doesn't get better right away, well, that affects your heart. So think about that kind of stuff. It's very important. And I don't want to sound gloom and doom, but people are procrastinators. That by our very nature, we think it's a good idea. Everybody sets up New Year's resolutions. And, I heard on the TV the other day, I don't have the actual statistics in front of me, but on average, people join gyms and this and that, they go to the gym for 3 weeks and then they're done. It's like, okay, I didn't lose weight or whatever their goal was. But we're talking about a lifetime. When we're talking about insurance and protecting your legacy, whether it's life insurance, it's long-term care, it's disability insurance, we're talking about your lifetime. Why are you gambling every day walking around uninsured? I don't get it. It's like, well, maybe I'll do it tomorrow. Please get off the fence and do it and protect your family and protect yourself. The very basics of disability insurance are protecting your paycheck. So if you can't work, you can still get paid. Doesn't that make sense to you? Doesn't that make sense that, oh my goodness, my job, I can no longer be, I also heard on the news, one of the officers that was in 9/11 who can't work as a police officer anymore because he's disabled. A bunch of them are, with PSD and everything else, and they're no longer working. They're disabled. Hopefully they have an income, okay? Or they're forced into retirement. That's, you got to protect yourself. So that's kind of my message today is get off the fence. Life insurance is the foundation of all planning, family planning, individual planning. Disability insurance is a foundation that you must have these things. And we can show you ways that it's affordable. It doesn't cost much. What costs is if you're not prepared and something happens. So with all this stuff going on, with all these respiratory ailments and everything else, we don't know the long-term care, the long-term effects of this. What I do know is in the last year, the last 2 years, the last 3 years, I keep losing friends, associates, and relatives. 40s, 50s, 60s, 80s, 100s, all ages. I'm losing. I'm sure you are too. Or I know people that have gotten very sick and haven't recovered. And this is reality. If you have the blinders on and you're not facing reality, that's all I'm trying to tell you is wake up, face reality, sit down with us, let us help you make plans for your future. Whether you're 20, 30, 40, 60, 80, I don't care. We all need to plan, and our plans change. So that's my, half-hour message is that we all need to change. We all need to look at it. Please give us a call. This is Neil Himmelstein. I can be reached at 631-647-4694. You're listening to the Main Street Code for Financial Success, and we'll be right back after this commercial break. Welcome back to the Main Street Code for Financial Success. One of the things that we talked about is building your structure, building your building, your family, and making sure that you have adequate protection. Very, very important. And we can show you ways that doesn't cost a lot. Costs a lot if you run into issues. And we don't know when the next issue is going to occur. Life has curveballs all the time. And trying to help you with those curveballs. What we've been doing we've been seeing a lot of something called life settlements. And you hear it on TV where they're talking about, if you have a policy and you're over age 60, let's tell you what that's all about. So a life settlement is your life policy has a value to it. So if you've been paying for a life insurance policy for a long time and all of a sudden it didn't perform, it's getting very expensive, you don't need it anymore, you don't need the expense of paying for it. I mean, that's a big thing. Maybe it cost you $100 a month and now it's costing you $1,000 a month and you're retired and you go, well, that's a bill that I really can't afford. Let's face it, when we're older and we're retired and we don't have that paycheck coming in, liquidity is a big deal. That's where reverse mortgages come in and all this other stuff comes in. Liquidity is important. So if you have a big expense and you're paying for a policy and you can't afford it anymore, don't drop it. If you drop it, you lose a lot, okay? You lose the death benefit, but not only do you lose that, you have any cash value. I mean, you can surrender it if it's a permanent policy, but you may not get your value from it if you just drop it. And you might have to pay taxes on it if you have some loans on it. So it's a big deal. So the other option is you could sell it. And you don't want to sell it to anybody. So you have to sell it to a group. And there's very few people that are in this business that understand what we call a life settlement business, where we actually send it out and sell it. Now, who's going to buy these type of policies? You're not going to sell it to an individual. It's usually a group that will buy these policies. They use it as like a hedge fund. And the fund, per se, will buy a group of policies, and they want to buy policies of people that are older. The older you are, the more value that is, because the return is, once you pass, they're going to pay all the premiums. And if you have, it acts exactly opposite of life insurance. If you have health impairments, you have heart problems, or you have other issues, major health issues, then they'll look at what they call their life expectancy, by looking at your health and making a judgment, which an insurance company does when you buy a policy. But when you sell a policy, they do the same thing, only works in reverse. The less healthy you are, the more they're going to pay. And the older you are. The less healthy and the older you are, the more they're going to pay. So you want to work with people like myself who has proficiency in underwriting, not just 1-800 number, because not only do we know how to underwrite and make you look good and talk about all the wonderful things that you're doing in your life, but we also negotiate with different companies to get you the best offer, so that if you want a good price for your policy. So we're doing like 3 or 4 of them now just in this last week. So people are looking at their expenses and they're looking at these policies, and in some cases, they're paying for it and they'd rather pay, their kids aren't doing that great. They'd rather just pay the kids what they're paying for their policy instead of paying for the policy. It's more important that now. Or in some cases, they don't need it, or they don't want the expense, or, it's just, their beneficiaries are all gone. What do I need this for? And I want it for my income and for my living expenses. So, it's one of the tools in retirement that's available to you. And it just tells you that life insurance contract is a valuable contract while you're living. You could sell it. Wow, while I'm living and I paid into this thing for all these, what did I pay for? Well, maybe I can sell it and use that money to, supplement my expenses or go on vacation with it. But that's a key thing in liquidity. So that's a big deal. And we complement that with all the other things we do, like immediate annuities, which will give you an income for the rest of your life. So we can take an asset and turn it into a nice income that you can't outlive. Great thing. Can't outlive, like Social Security. Can't outlive it. Just pays every month. So we could do that with settlements. So we can augment your income. We can supplement it. All kinds of things we can do. So it's just another tool in the toolbox. It's another financial thing that you may want to consider. And a lot of policies haven't performed, let's say, because they're predicated on an interest rate that was maybe 10%, and then it fell down to 2%, and now you're playing catch up. And it's hard to catch up. So I did want to talk about life settlements. I also want to talk about what's happened in the last year and a half. In the last year and a half, we've had an unbelievable rise in interest rates. And while that may have driven some inflation and everything else, and people are nervous, many of my clients have taken advantage of locking in high rates, in the 5% range for a long period, buying fixed annuities for a long period that they don't have to worry about the market, guaranteed. And as if the interest rates drop again, as they're predicted to, they're not going to drop to where they were, I don't think. But let's say if they drop a point or two, they're already locked in at the higher rate because they bought in the last year and a half. So for the next year, 2 years, 3 years, 4 years, 5 years, if interest rates drop back down to 1%, they're still getting 5% return because they've locked in. We still have that availability now. I don't know how long it's going to last. We don't know. We do know that there's been 3 mortgage drops. This morning I just read that it increased a little bit. But we were in the 7.5 range. We're now in the 5.9 range. Big difference. Okay, so I know that it affects young people. I have 2 of them of my own, which, they don't have a mortgage, but it's made them prohibitive buying a house. But at the same time, we think those rates will come down some. And but you can take advantage on the other side, especially if you've accumulated assets in retirement, without risk. That's the big deal, is risk. As we get older and as we don't have that income coming in, we have to associate our risk. And if we can get those kind of projections and numbers, whether it's a guaranteed income or a guaranteed rate of return that I'm not being taxed on, that's going to accumulate for me for later in retirement, that's what we've been seeing. And we've had record years with annuities. Record years. The other thing that we're doing a lot of is long-term care. And long-term care has really morphed into mostly life insurance with long-term care. A lot of people are using their dollars more efficiently than just buying a long-term care policy. And that's the way the industry trend has been. And a lot of 50-year-olds, 60-year-olds, they may have life policies, but they have term policies that they're paying a lot for that they'll never use. Or they have permanent policies that they've had for a long time that don't have the availability to use for their long-term care. So a lot of activities happen in the what we call the hybrid long-term care market, which is a combination of life insurance with long-term care. So if you have any questions in those areas, we encourage you to call us at 631-647-4694, whether it's for you, for your parents, for your brothers, for your sisters, for your colleagues, or for your business. We work with business professionals, individuals, estate planning. We do it all. 631-647-4694. I'm Neil Himmelstein, mainstreetcode.com. That's our website. I look forward to talking to you. Have a great new year. And really, sit down. Let's do the planning. Let's sit with our spouses, our children, and really figure this out. Okay? Because we have to. Thanks again.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.